Hey everyone, welcome back to the channel. So today we're going to do a video update on AMR Stock, Alpha Metallurgical Resources. Now this is officially the best performing investment in the history of my YouTube channel. I first invested around 14 months ago, and last I checked I'm up over 1300%. So obviously things are going better than even I imagined. So in this update we're going to talk about the company, why things are going so well, what there is to look forward to in the future, what the position looks like now in my portfolio, and my new price target for the stock. If you're interested in this company, watch the video the entire way through to get a full picture on what the future holds. So now let's get right into it.
Start the video, I have to say that I am not a financial advisor. This is not financial advice, and that you should always do your own research before buying a stock, not just because you see some guy talking about it on YouTube. All right, so first things first, we got to take a look at the stock price. So as of today, AMR's hit a new high. We're now over $60, sitting at $61.40 a share. So obviously a huge increase in the past year. The stock has doubled since my last update video on the stock, which wasn't too long ago. So it just seems like the stock has been gaining a couple of percent every day, really over the last 5-6 months. So now let's get into the reasons for this rapid rise in AMR stock price and talk about what I'm doing with my shares now that I'm up over 1,300% on the position. Now the first thing we have to look at is the price of coal, and this has gone absolutely parabolic since the last time we checked this chart. Just in the past couple of weeks, coal has jumped from $175 a ton all the way up to $240 a ton. And if we back up the chart and take a look at the long-term view, this is the highest coal has been in the past 10 years by far. The last peak was back at the beginning of 2011, and that was at just about $130 a ton. So we are now sitting at almost double that price. Now, when I first invested into Contour Energy, the real best case that I was expecting was for coal to go back to around its high prices that we saw in 2011 and back in 2018. That was my thesis for the $60 to $80 price target. Now, however, we are so far above that I think it makes sense to revisit our price target to think about what the company could now be worth with coal prices being this high. Now, I think this chart is showing the price of thermal coal, not met coal, which is AMR's main product. So AMR is not selling coal for $240 a ton. However, the price of thermal coal and met coal, for the most part, move together. So with the sharp price in thermal coal, you're also going to see a large spike in met coal as well. So if we take a look at the analysis from this website, coal futures continue to break fresh records to $240 per metric ton, which is up 171% so far over the year. Now, there's several factors which have been contributing to this price rise, like tight supply in China, as the country vows to achieve emission standards and reach carbon neutrality by 2060, a lack of mine investment, reflecting pressure from socially conscious investors, import constraints, and a surge of natural gas prices. So all of these factors are really creating the perfect storm for coal as an investment. And to be honest, I don't really see many of these factors going away in the short term, which does mean that it is likely we'll see an elevated coal price for quite some time. Now, this is just another article I found that shows what kind of supply shortages are happening in the coal space. This article is from last month, and it says a mine accident in China sent China met coal prices to above $600 per ton. So a Chinese province ordered the coal mine to suspend production for a month to fix safety lapses after a fatal accident. And this outage could cut 500,000 tons of output from the mine. And obviously this resulted in a huge price spike. And so the reality is there's just not enough coal. There's just not enough coal being produced to meet the demand. And so because of that, even one mine closing down is going to lead to huge spikes in price of coal. Obviously, this was just a regional thing. Prices didn't get this high in other countries, but it just goes to show the potential for any little disturbance in the supply chain of coal to result in massive price spikes. So now we're going to take a look at the company's latest earnings results, which was a couple months ago, back at the beginning of August, and we're really going to dig into the numbers and what management expects. Because doing this, we can take a look at what kind of income the company is expected to make from these elevated coal prices. So this is the transcript from the earnings call, and I'm just going to go through a few things that management says that I think are really going to be the highlights that allow the company to produce value for shareholders. So the first thing I'll talk about is what the management is doing in terms of divesting assets. They say we divested non-core assets and set ourselves on a nearly complete pathway to becoming a pure play met coal producer. And their last remaining thermal mine is expected to close roughly 1 year from now, which is August 2022. And at that point, they'll have no remaining thermal operations. Now, I think this is a potentially overlooked point because I think a coal producer that no longer has thermal operations is going to potentially attract some more ESG investors. Obviously, with the ESG investing craze right now, the vast majority of institutions won't touch anything with thermal coal because it's labeled by the government as, bad, harmful to the environment, causes a lot of pollution. And so because of that, most institutions aren't going to go anywhere near a company like that. However, once AMR transitions to a fully met coal play, I think that has the potential to attract some new investors that will help push the stock price to its true value. In addition, thermal coal is shrinking as an industry anyway. Every year the use of thermal coal is going down. However, met coal demand is rising year by year as it's used for steel production, which is going to be needed for construction and in all sorts of industries where the demand is rising. Now, the next thing the management has done is they pay down some debt early, so they accelerated the timeline for completing one of their legacy payment obligations from their previous bankruptcy in the West Virginia LLC note, and that is just another step in really deleveraging the company. Obviously, when I first invested in this company back in 2020, there was a real risk of default. However, now with coal prices and amount of EBITDA that the company is bringing in, unless management just does everything wrong and makes the worst capital allocation decisions imaginable, then looking at where things stand now, the company is in a pretty stable financial position. Over the next year, they're going to be bringing in a load of EBITDA, and I'm expecting most of that to go towards debt paydown. Now, another thing the company is doing is actually making investments to increase production. So management says they're raising the CapEx guidance for the year by nearly $8 million. And this is for a development project called the Road Fork 52 projects. And these are going to be low-cost mines that are going to be able to repay the investment incredibly fast. The way that they price this mine out is that the expected payback on this investment is expected to come in less than 6 months, and at the daily spot prices at this time, perhaps even in a quarter. So because there is such an imbalance between the supply and demand of coal, companies are able to develop a new coal mine and instantly recoup that investment just within a quarter. And coal prices have only gone up since this was said. So it's very possible that as of today, that whole investment has been recuperated from the coal produced by that new mine. And this is a very unique thing that's happening with the coal market, because in commodities, what usually happens is when the price of a commodity goes way up, you're going to have a bunch of producers increasing production. That's going to bring more supply into the market, and that is eventually going to bring the price back down. However, I think it's going to be different in this scenario just because so many governments are cracking down on coal production that most coal miners aren't able to have this flexibility to be able to open new mines. And so that's where I think AMR potentially has an advantage, that they're able to make these incredibly high return investments because a lot of their competitors aren't able to. So next, what we're going to do is we're going to do some math to figure out how much EBITDA the company is expected to bring in from current coal prices. So for this, we're going to need a few data points. The first is the total amount of coal that's going to be shipped. So the management has increased total shipment guidance for 2021 up to a midpoint of around 16.6 million tons. So that's the amount that we're expecting the company to ship. Now, next, we just have to figure out the margin that the company is making per ton of coal being sold. And management also gives us that information as well. So for the met coal segment, the realizations came in at $83.38 per ton. So in the quarter leading up to August 6th, so that's what the average price of the coal was. Now, in terms of production costs, the met cost of coal sales were around $69.94. So if you just do that quick math, assuming that it costs $69.94 to produce a ton of coal, the coal is then sold for $83.38, and the company produces 16.6 million tons over the course of 2021. That math works out to about $223 million of EBITDA. Now, if you look at the market cap of AMR right now, the market cap is just under $1 billion, $985 million. And so based on that coal price during the first half of the year, you would produce just about a fourth of the entire market cap in EBITDA. But here's where things get more interesting, because that calculation was based on the coal price for the first half of the year. When you now look at current coal prices, the calculations start to get crazy. So during the Q&A section, someone asked a question about what prices were with current coal prices. Again, remember, this is August 6th, and so management says if you take a look at the Australian indexes based on August, you'd come up with a number that looks about $70 a ton higher than right now. And that works out to around $140 per ton. So now that's obviously a huge jump in coal prices. And if you assume that the cost of producing the coal remains around constant, obviously that price is going to increase slightly with just general inflation. So if the company can still produce met coal for $69.94 and sell the coal for $140 a ton based on a total production of 16.6 million tons, that would bring 1-year EBITDA to around 1.163 billion. And again, the market cap of AMR is currently under $1 billion. So obviously you have to work out some of the expenses. The EBITDA is going to be probably slightly lower than that. But if you assume that coal prices stay relatively constant with where they were in April, then AMR has the potential over the next 12 months to make more in EBITDA than the entire market cap. And so I think that has the potential to produce explosive upside, more than we've even seen so far. So now in terms of thinking how I'm coming up with a target price for this investment, I'm really viewing this investment differently than most of my other investments. Because with a company like AMR, fundamentals don't matter as much, right? Almost the entire fate of the company is dependent upon coal prices, which are the commodity that they produce. And so to think about this investment, I'm first thinking about what I expect coal prices to do, and then I'll think about, based on how much money the company can generate from producing coal, what the value of the company should then be. And so here is really my basic framework for thinking about coal prices. I think there's really 4 factors right now that are going to keep the price of coal elevated. The first is unprecedented money printing by governments. Over the past year, really every major country in the world has turned on the printing presses. They've rapidly increased the monetary base, and that is going to lead to just broad price increases really across the board, which bodes well for commodities in general. But now specifically relating to coal, there's also supply and demand issues. So on the demand side, there is high demand for met coal from developing countries like India and China, but even for already developed companies like right here in the US, where you have talk of the massive infrastructure bill that's coming. Well, if all of this new spending and rebuilding the country is coming, they are going to need a massive amount of steel, and that steel is coming from met coal. Now, despite this huge boom in demand, there's also an issue on the supply side, that while countries are demanding massive amounts of coal, governments are limiting coal mine development and really shrinking the supply of total coal available to the market. If this were a totally free market, then this would work itself out because more coal producers would come in and produce more coal. That would end up lowering the price. But with the supply being artificially restrained by government, this is going to create a disturbance in supply and demand, and that means price will stay elevated. And lastly, the ESG investing craze continues. This probably isn't going away anytime soon, but now the vast majority of institutions, large investment firms, are only going to invest in companies that have a strong ESG profile. Now, I don't really know exactly what that means, but I do know that it doesn't include coal. And so because of that, these coal producers are going to continue to be underfunded. Right? Even if governments allowed it and coal miners wanted to produce more mines, with ESG investing, they're just not going to be funded. No large institution is going to loan money to a coal producer to build new coal mines. And so that's really a double whammy on the supply side, where you have both governments limiting coal production, and then on top of that, even if coal producers are able to build more mines, it's going to be hard to get the funding for that. And so based on the simple framework I use, these 4 factors lead to high coal prices. Now, how high, I really don't know. I mean, it's pretty much impossible to say where the price of coal will be a year from now, 2 years from now, 6 months from now, even a month from now. But I am expecting the price of coal to be high by historical standards. And so finally, I'll talk about the stock, how the stock fits in my portfolio, and what I'm planning to do with the stock. So obviously the stock is at a huge run up. When I invested in the stock back in 2020, I initially took a very small position by my standards, because at the time it was a very risky play and there was a real risk of default. So when I first invested, I think the stock was around 3 to 4% of my portfolio. Now, obviously that has grown, and last I checked, AMR is about 18% of my total portfolio. And when I first did a video on AMR, I said my initial target price was in the range somewhere between $60 and $80. And so now that the stock price is officially over $60, that begs the question, am I going to be selling the stock? And the answer is probably not. For the reasons that I just talked about, I do expect coal prices to remain very high, and we did the math that if coal prices remain in the range that they are right now, and even come down a bit, the company could produce more in EBITDA than the entire market cap. And so because of that, and management's mention of things like larger dividends or buybacks potentially coming in the future, I think this stock could produce another explosive move upwards really in the next 1 to 2 years. I think there is potential for a very great rate of return holding onto the stock for another 1 to 2 years. Now, that being said, this is not my example of a great company, right? This is not a compounder. It's not a stock that I'm planning to hold for 10, 20 years. But as long as those factors are in place where there's not an equilibrium in the market and coal prices remain abnormally high, I'm probably going to be holding onto the stock. And in terms of a new price target, it's really incredibly hard to say. It depends on so many things like the price of coal and what management decides to do with excess capital. And I don't want to sound like the typical finance YouTuber that hypes up stocks and that puts impossible price targets. But based on EBITDA projections for the next couple of years, I do think that a price like $200 a share is not impossible. I'm not saying it'll go there for sure, but I do think in a best case scenario, that is the type of price that I could be looking at as a shareholder. So that's the video update for AMR stock. Obviously, if you're someone that invested last year, you've done very well, so congratulations. I wouldn't blame anyone for selling here at such a huge gain, but again, I am still holding on to my full position. Of course, I'll let you know if anything changes, but that is my mindset with the stock for now. So if you enjoyed this video, leave a like and a comment down below. Helps out the YouTube algorithm so others will see this video. And yeah, I'm trying to get back into the YouTube game after not really doing anything for a couple months. So be on the lookout for new videos. Hit the bell icon so you get notified whenever I upload a new video if you haven't already. And so I look forward to seeing you in the next video.